I'm Jordan Trimble. I'm the president and CEO of Skyharbour Resources. As Jeff mentioned, we are a uranium company. We're focused in the Athabasca Basin. And why care about Skyharbour right now? Real simply put, we just started the second phase of our largest single-year drill program. We'll drill another 8,000 meters. We've just made a new discovery earlier this year at one of our co-flagship Russell Lake project. And we're expanding a resource at our other co-flagship project, Moore Lake. I'll talk more about that. But you're basically going into a drill program that could yield a market-moving, new, larger discovery hole, multi-meter, multi-percent kind of material that really gets the market excited at our Russell Lake project. We just happen to have as well 5 or 6 partner companies that all be kicking off their programs in the next 6 months. And for those of you who follow the news in the nuclear industry, I don't think any one of us had it on our bingo cards that 3 Mile Island is restarting in the next few years here. So that was just announced this morning. Constellation signed a big agreement with Microsoft, $1.6 billion refurbishment of that nuclear power plant. That's going to be powering their data centers for the next 20 plus years. So very exciting time indeed. So investment highlights. I pointed out a few, but we have a very catalyst-rich story here over the next 6 to 12 months. We're fully funded for all that. So this year we'll have drilled 15 to 20,000 meters, including the second half of that coming up at our Russell and Moore Lake projects. But we have a dual-pronged strategy. So in addition to being a high-grade exploration and discovery story, we also act as a prospect generator. So we have a hybrid model, and we have 7 partner companies, either option or JV partners, spending upwards of $80 million across several other projects in our portfolio. We have 29 properties all throughout the Athabasca Basin, 1.4 plus million acres of ground. That puts us as the 3rd largest mineral tenure holder in the region behind Cameco and ATHA. We're continuing to expand that portfolio. We have projects ranging from earlier stage, more grassroots properties, right through to more advanced stage exploration assets that host either small uranium deposits and or multi-percent, so high-grade uranium in previous drilling. As I mentioned, we're just coming off a drill program, really a breakthrough program for us at Russell Lake, where we intersected up to 3% in one of the first drill holes that was drilled into a brand new target. So again, very exciting time. Now, looking across the basin and comparing us to other peers, very few other exploration companies have a sizable, dominant land package like this. A lot of the claims also have a lot of assessment credit banked up on them, so they're not at risk of lapsing. But we have pounds in the ground as well. We have a few projects that do host small resources, and in fact, one of our co-flagship projects, as I mentioned, Moore Lake, we're very much looking to build out a resource there. Very strong management and technical team. We just added a new VPX, which we'll talk about on the next slide. And last but not least, it's important to have larger strategic partners. So Skyharbour, we're about a $70 to $80 million market cap company. Price you'll see in the market. Obviously, the summer months were challenging for a lot of uranium companies, as they typically are. Seasonally, it's not a great period. September through December, January, usually very good few months for these companies. So we've pulled back a little bit, starting to move higher again. But it's important to have larger strategic partners throughout the volatility that we can see in the market. So we have 2 major strategic shareholders, corporates in Rio Tinto and Denison Mines, Denison being our largest individual shareholder. Their president and CEO is a director of Skyharbour. But we also have France's largest nuclear and uranium mining company as a JV partner at one of our projects. So 3 major strategic partners to have. The management team and board, I won't go through every individual. Jim Pettit and I started the company about 10 years ago, saw a very contrarian, unique opportunity to buy these very, very deep value assets in the Athabasca Basin post-Fukushima. We just sold a gold company called Bayfield Ventures to New Gold in 2013, so that's when we started Skyharbour shortly thereafter. Dave Cates, I mentioned, President and CEO of Denison. Joe Gallucci's the head of investment banking at Laurentian in Montreal, brings a wealth of capital market markets experience. And our geological team headed up now by Serdar Donmez and Dave Biard. So Serdar is the most recent addition, just announced this a week ago. Serdar was at Denison's Wheeler River project. He worked for Denison for 20 years, almost 20 years, from the discovery at Phoenix and Griffin right through to the feasibility study. Our two main projects that we're advancing are adjacent and proximal to Wheeler River. So he is a huge addition for us in terms of our exploration success, potential success going forward. Dave Biard, who's been our head geologist, remains our head geologist, is a 35-plus year veteran, worked at Cameco, and ran a company, sold a company eventually called J&R to Denison Mines. So you can see how that relationships come full circle. And then last but not least, Paul Matizik, well known in the industry, is an advisor and large shareholder. I won't spend a ton of time on these slides, but I'm happy to discuss this in depth at our booth just outside here. But three underlying major macro trends that are really kind of underpinning this move higher in uranium and nuclear sentiment, in nuclear electrification. We need more electricity. I talked about the data centers and the AI data centers in particular that are going to require a lot more electricity, but they need baseload emissions-free electricity. And nuclear is the only source of emissions-free baseload, reliable, scalable, affordable electricity generation. And last but not least, energy security and independence. This market, much like some other commodities, is bifurcating east versus west. The east, i.e. Russia, Kazakhstan, Uzbekistan, parts of Africa, these are the largest producers of uranium relative to Western producers, yet Western utilities still consume the most uranium. And as we're seeing more Eastern production earmarked for Eastern consumption, the West is going to have to wake up. We're going to have to start producing more uranium, and that's where companies in the Athabasca Basin, I think, have a significant role to play. And then just quickly on the supply-demand. So some of the most, I'd say, compelling supply-demand fundamentals of any commodity out there. 200 million pounds of demand, growing quickly now, especially with data centers, AI data centers, EVs, crypto, and just the electrification we're seeing globally. But we're only producing about 150 to 160 million pounds. So that's a cumulative supply deficit over the next 10 years of over 400 million pounds. We're going to have to see utilities buying, and we're going to have to see more long-term contracts being signed in the near term. Now, moving on to the project portfolio, you'll see here, as I mentioned, 29 projects, over 1.4 million acres, dominant land position. You'll see we basically have every sub-region of the Athabasca Basin covered. You get exposure to any nook and cranny you can possibly imagine in the Athabasca Basin with this portfolio of projects built up over the last 10 years. Our two flagship projects, as I mentioned earlier, you'll see here, Russell and Moore Lake. So it's a combined about 260, almost 270,000 acres of prime real estate located right between the McArthur River Mine to the north and the Key Lake Mill to the south. Unlike most companies, we have access to infrastructure. The haulage road, the mining road to McArthur River runs right up through Russell Lake. We have an exploration camp that Rio Tinto installed 10 years ago there. So that brings our drilling costs well below all in 350 Canadian a meter. To give some context to that, most exploration companies are at least 500 to 600 plus all in Canadian a meter currently in the Athabasca Basin. So we get a lot of bang for our buck there. As I mentioned on the Russell Lake project, we just made a discovery earlier this year. It was one hole. So we're looking to follow that up with this next 4,000 to 5,000 meters of drilling that'll commence in about a month's time. And then right beside Russell Lake, our 100% owned Moore Lake project, which we've been drilling for the better part of the last 8 years. That's yielded some very high-grade drill results, 21% over 1.5 meters, 6% over 6 meters. We just announced 7% over 3 meters. So we've had some very nice high-grade mineralization and relatively shallow. So it could potentially be ISR Sabre amenable down the road. We haven't done the studies yet, but that is something we are looking more closely at. So a very exciting two projects, co-flagship projects, both advanced stage exploration assets. And as I mentioned, we've just commenced another 7,000 to 8,000 meters. That'll be about 2,000 to 3,000 at more, which has just commenced, and another 4,000 to 5,000 meters at Russell. So that'll generate news flow right through to the end of the year. And I'll just wrap up with the last two slides here. So this is a snapshot of our prospect generator business. I won't get into too many details, but this is the list of all the option and JV partners. We have a very robust prospect generator business with partner companies spending potentially upwards of $80 million, and we are looking to add to this list very shortly. As I mentioned earlier too, a handful of these companies will either be drilling or exploring in the next 6 months. And just to wrap up, upcoming catalysts, I've talked about them, but just to highlight them again, major drill program that's just commenced, second phase of this year with 7,000 to 8,000 meters at Russell and more. We are working and planning to issue a resource estimate as well at our Moore Lake project next year. Again, relatively shallow, high-grade mineralization. And then we have the various partner companies, multiple irons in the fire with these partner companies working on the various projects. And last but not least, the uranium market, as Jeff mentioned and as I talked about, we're coming out of the summer doldrums. This is seasonally a very strong period, and we're seeing a significant resurgence in this sector as a company operating in the Athabasca Basin in the West. We're well positioned to benefit from this.